following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. Wow, a lot happened since the show on Friday morning. The worm turned a little bit here. So, again, a lot of the internals changed, and we're taking a look at that now in the scanner. A lot of the, 330 stocks closed below profiles relative to 58 above. That's a pretty big turnaround in one day, folks. We talked about some levels on the S&P. Let's see here. We talked about some levels on the S&P Friday morning, and we're going to revisit that a little bit. And again, we just try to pick the battles. What was in front of us was kind of a compress to go higher, but the rate fears, wow, the quarter point just thing is, oh my God, is scaring the crap out of people. Obviously, a lot of the global indices going into the global indices view on the daily. You got one shining star we've been talking about, Colombia. That actually, even came back a little bit, but nothing really to write home about. That index is just really been a strong situation. We've talked about that a lot. And we're going to look at that in e-signal in just a second, but nothing really escaped the carnage on Friday. We're looking at the September dollar right now, still hovering above this 95.1920 area. This is the September contract on the dollar. We're going to look at the December S&Ps, the December gold, the December notes, and we've obviously got a big grain report out today, and a lot of volatility is going to happen around that one. We're going to talk about that a little bit. We came off of that 983 area. Here's here's November beans. And again, this is kind of a wait and see right now. And let's go right into the S&Ps here. We're going to have Juan Villegas on, and just after the first break, he's in Miami today. Has a new book out. In fact, it's in Spanish. We're going to talk about some cool things with him in just about 10 minutes. Taking a look at the S&Ps on the September contract, we talked actually about I think around 2065, 64, somewhere in there. A lot of the breaths changed to negative as we started traversing below these areas. And again, that's what stops are for. This is the December contract on the S&Ps. Here's that 2142 on this contract. And we're down again this morning. So the question is, do you buy the down opening after a big down day like Friday? In my opinion, you have to look at the different time frames, and you have to always be able to, have a chance to play defense here. I'm looking at the September contract. I'm looking at the 240s. We actually got below 2100. That whole number, actually, we rested right at 2100 last night or early this morning, trading about 2108.09 right now. And I still think you're kind of playing with fire here, trying to buy this thing. Here's the 60-minute. You do have some hints right now, and I'm going to go into the scanner and look at my futures section. And let's see here. We've still got the September up right now in the scanner. I'm going to get that changed. Kind of rolling over right now to different months. But here's the 60-minute on the e-signal chart, showing that we have kind of broken stride a little bit. So your short-term support on this 2106, top of the profile on the 60-minute. We don't talk about this a lot because it's usually not something that you can rely on during the day. Some of the things that we talk about as far as profiles, levels, inflection points, because they're very short-lived and they can change quite a bit during the course of the day. So the 240s that I look at a lot, really nothing yet trying to appear there. So again, I'm kind of passing on this, and we've talked about religiously, really, how do you trade this market from the short side if you think we're going to have a meltdown like we have Friday? We've been looking at some stocks on the short side in our custom sort, strong downtrend or even downtrend, or some of these downtrend resistance custom sorts. I'm going to look at strong downtrend here. Some of the stocks we had been looking at, Disney got hit. Again, an easier way to play the short side is just to drill down into the underlying instruments and find the ones that aren't really cooperating. I understand some of these stocks that are high-profile stocks that have kind of been in the ether up top came off quite a bit, but again, you don't know that those sell-offs are going to happen. That kind of caught everybody by surprise. That just caught momentum. Kroger actually was up Friday, but we kind of have been looking at that as a weak stock. No harm done. Just wanted to point that out. It doesn't always work out. But a couple of these other stocks, Fossil, we've been kind of pounding the desk about this on the short side. Nothing new here. These stocks just boringly just again came unhinged. Dollar General, par for the course. Closed on the lows for the week, already been proven, broken the spine of that thing technically. Bristol Myers, let's take a look at this one. Again, sold off, got below daily unfair lows. These are some of the stocks that we've been talking about from the short side. Let's see. Lockheed Martin was another one, kind of rallied back on Thursday into that 241.93 and then sold off all day. Here's the weekly on Lockheed Martin. First hints, we're getting below 249 on that one. And going back to the S&Ps, as we look at this now, should you be trying to buy strong stocks right now? I think this is a little early. I think there's a lot of people adjusting positions as far as portfolio managers right now. We definitely had some technical damage, and we definitely had that weekly close below profiles, and we've got breadth, our profile aggregate breadth relative to what stocks are doing relative to balanced areas. If I go back into the scanner, we've got a lot of these, kind of things that have changed up here. And, the Dow being down almost 400, it's a big move. We could get a little bit of a rally back, but I think, right now you've got to be looking at the internals as a whole and be looking now at resistance areas possibly to sell. And you just don't have any of those right now. We're kind of in no man's land this morning. I let the market open. I don't know if I'd be buying strong stocks right now, but some stocks have held up. Well, if I can get the scanner to come up here, that'd be nice. There we go. And as we go to break here, we're going to come back with Juan Villegas and talk a little bit about some of the things he's looking at. And we're also going to revisit later some of these strong stocks that held up during the sell-off. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And I think we're honored to have, Juan Villegas on with us right now. Juan, you there?
Absolutely. I'm here.
Hey, man. How's Miami?
It's just gorgeous, man. I would love to live here and trade here. I have a fantastic view. I just watching the Atlantic Ocean here, the Caribbean. So I'm having a blast.
Nice.
You should come down here, man.
I will. You're going to be there for 2 weeks, so I got to get on a plane again and sit with you. We got a lot to talk about.
Oh yeah.
So you know, this is a good day to have you on. I know you just finished a new book, right?
Well, actually, I'm finishing a new book, yes, and the last one, which is called Ingresarios. Let me try to translate that into English. Probably is going to be revenue makers, or profit makers, something like that. That became an Amazon bestseller book, and we talk about task tools in that book. So congratulations to you too.
Oh man, no, it's awesome. So if the folks out there have never, met you or listened to you when you come on the show, Juan is primarily based out of South America, and these books are trading really just quality killer books that you come out with, and they're in Spanish.
Yes.
Is the next book going to be also in English, or what? Or is that...
I hope so. Yes.
Okay.
I'll try to do that, and absolutely. And we also have a translated version of Ingresarios. It's not out yet, but it might be there in the market also. So it's a very interesting book because the book not only talks about the beginnings of technical analysis and the Dow theory and how Charles Dow and Edward Jones, you know that story, how they started? They were just doing mini charts, and they start doing charts with prices on Wall Street in the 1800s and the 1900s. At the end of the 1800s, the beginning of the 1900s, they start doing that. So the book talks about that story, and then elaborates into the more sophisticated tools like the task tools. And also the nice thing about the book is like every single chart has a video behind. So you have more than, if you do the Kindle version, you have more than 150 videos to learn. So it's very nice.
Awesome. Awesome. Well, I tell you what, if you don't mind, let's talk about the broad market and how it
yes.
relates to these rates. I mean, I mean, a quarter, the hint of a quarter point rate seems to have kind of pushed everybody off the cliff out of equities Friday.
That
What are
was
your thoughts?
nasty.
I know. I mean, what are your thoughts about that? Do you think this is kind of we're going to snap back as usual? I've been, this has been like years. I've like, okay, here's the sell-off, and then,
Oh yeah, I
yeah,
know. I hear you.
yeah. Do you think it's
Well,
just kind of a short-lived thing, or like, what are your thoughts on it?
well, if you look at the weekly, I mean, the daily has been damaged for
Whew.
sure. I mean,
Yeah.
it's a wide range bar with huge volume. It's just igniting a move.
Hmm.
That move should visit uh, weekly support. In the S&Ps is like I don't know if you have it there. Let me see. In the S&P is going to I mean, the 200 simple moving average and the
Hmm.
weekly and the daily is also. I know you don't follow those a lot, me neither, but
Well, no, I think they're very valid. I mean, I think just
yeah, a lot
I
of
mean,
people take a look at
yeah,
them.
just the fact that a lot of people looking at them kind of makes them valid,
Yeah,
by
yeah,
default.
exactly.
Yeah.
So, and we have a first red bar, as you can see in the chart that you're showing right now, and not sure. I mean, I think we have more downside in the coming days.
Hmm.
Look for support, and we're trading outside boxes. So the
Right.
theory says that once you're trading outside boxes, you should stay short until you have a new set of boxes. So I don't see why this is. I mean, it could snap back up absolutely, and I agree with you. It has done this so many times. I mean, last one was the Brexit, which was like crazy,
Yeah.
but this time is different because we have the Fed very near to start raising interest rates, as you mentioned before, and they're hinting that they're telling that in the past minutes. They say, well, we might start raising rates, but they have some differences inside the governor. Some of them want to keep low rates for as long as I don't know,
As they die.
but I guess so.
Yeah.
Or remember that we have an election coming.
Yeah. Yeah.
So I have no idea if the market is also discounting a potential Trump win, which I don't know. I mean, the market is also a discount mechanism. So there might be some people concerned about politics. Fed is kind of like the perfect storm
Yeah.
happening in the coming months or weeks. So
I know.
so my take, I'll be shorting rallies in
Yeah.
this
I
week.
think I agree with you. I think, I've been on this show, and I know you've been talking about it too. It is what it is. I mean, the market was kind of compressing up higher in a tight range. That usually is another, reason to kind of, look at the long side like it's going to do a move up again. When we had this break, I think it caught everybody by surprise. And one of the things I wanted to talk to you about today is, I know you're a big fan of kind of looking at the VIX and
Oh, I
looking
love
at,
the VIX.
yeah,
Take a look at that thing.
yeah.
What it
Um,
did Friday was like 27% up, 26, something like that. And I think it's just starting that move on the VIX and the ETF. Well, actually, it's an ETN. VXX is an extraordinary vehicle to hedge your lungs. So if you're long S&Ps and on Friday and you want to protect that, a lot of people bought options on the VIX and also the ETN. And it made a crazy move. I mean, I haven't seen that move in many, probably years or months. You
Yeah,
have that VIX?
we've got a friend of ours that comes on.
VXX.
Yeah, it comes on every once in a while. His name's Steve Banger, and it's kind of a waiting game. One of the trades that he was talking about getting into some December VIX spreads, and I'm trying to get I'm trying to figure out how much money he made this morning, but he's having a problem with his brokerage account, so he said he couldn't talk. But man, I mean, the VIX was just low, and you just have to kind of blindly buy volatility sometimes down there. And I think that was just such an incredible, piece
It
of.
was a great trade.
Oh yeah,
It was
just
a great
incredible.
trade. I was just traveling, so I couldn't trade.
I know it always
I missed
happens
it.
when you're traveling. It's like whenever
Shit.
I'm in an airport, market's going to go crazy.
I
Same
know.
thing. Yeah.
I know.
So, can you hang out for another segment here?
Absolutely.
Great. We're going to break, folks, in just a couple of seconds here, and we're going to be back with Juan Villegas. And stay tuned.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and we've got Juan Villegas on with us this morning from Miami. And Juan, can I pick your brain about some stocks here?
Yes,
All
absolutely.
right, so let's go to the household names here, because Facebook. You know what's interesting to me on Facebook is Facebook actually closed up for the week, even though it sold off. 126.32, 125, and some changes where I have support on this. Do you think? I mean, what's your thoughts on this thing? I mean, it's almost just terrifying to try to short it.
Too many greens. I mean, one of the things that probably you have mentioned this, but once you see so many green bars and yellow bars, and there's going to be a red one coming soon. How many sessions have we without the red bar have we got? How many? Look at that. It's just I don't see how it's going to stop. Of course, it's a very strong name. It's a huge company. Fundamentals are very strong. But from a technical perspective, if that thing trades below the POC in that chart, I will go short. I'll go short. But it is kind of a breakout failure. That thing break out and failed. So I agree with you. It's going to be hard to short this thing. So it's going to be like a hit and run type of short. But if that thing breaks below the POC, and then if it breaks below the box, you're going to see that thing looking into support and then the next box on the left.
Yeah, it could turn into an Apple situation from, I think 125 is when that thing started breaking down. And then it was kind of seller rallies. But, you know, I don't know who in the world would be looking at this right now, like you said, as a short until we started seeing some technical damage. And the thing is it did close up for the week and is sitting pretty much at support. So, Juan, the reason I brought it up was, you know, you and I always talk about relative strength trading and situations like that. And, you know, do you think it's time to start looking at instruments like that have held up on a day like today to try to okay, so the answer is yes. So
and the usual suspects, you know, the FANG, Facebook, Amazon, Netflix, and Google, those four. I mean, I always look at those four, and because Nasdaq is not even Apple. Apple is not part of the FANG mafia, if you can call it like that.
Right.
But yeah, I think they have a very powerful rally, and it's about time. If you're long those names, probably take some profits and secure those profits, and look for short potential, but again with a very tight stop and a hit and run strategy to make some money. But I will be very careful going long with this thing. I think it has a short opportunity. Apple is trading below. Look at this. This is the first weekly red bar in a while since June, actually. So I think Apple go to 90.
So 105.5 was that big number we talked about 2 weeks ago. Found support, got a little trade and bounce there. And then I want to show you the daily on Apple. We pretty much closed right around on Thursday the support area. Then Friday got a little bit of a rally up into resistance, and then we just got hammered. So you know, Apple right now, again, showing the first technical damage on the weekly in a while. Actually, since we started having some break May, yeah. So
and John, John, and here's another example in the last chart, the daily of Apple. Here's another example of when you see too many green in the screen with the algorithm, the Vega. When you see too many bars green, it's time to consider taking profits, or if it breaks support or boxes, POCs, and all that stuff, start thinking about shorting that thing. And it happened.
Yeah, no, you got to have the indications. And, you know, Apple's something that finally has had some technical damage on the long term for sure. Let's take a look at Amazon, because this one, they just kind of, you know, pulled the rug out from under this, so to speak, finally. And actually
Amazon is a huge name. Oh my God, that's a huge bar. Yeah. So
nasty. Yeah. So this one been a strong stock.
Again, you know, too many green.
Had a little bit of a pullback. I mean, is this something that you wait on? Because I mean, we pretty much had technical damage on the weekly and the daily here now, and you know, even though this is a company that seems to be ruling the a lot of different spaces. What do you? Is this something you kind of look at, like kind of licking your chops on the long side, or is this, do you just kind of stay away?
I will not go long. I'll stay. Look at the Navigator is a little bit overcooked, I guess. Too many greens. It started correcting on the daily. It's the first wide range bar on the daily, so I think Apple could go. One of the things that the analysts had talked about Amazon, I'm sorry, is that it's going to be the first $1 trillion company. That's what they say, but not now. I mean, I think I'll buy the retracement, of course. The monthly is a powerful. You have the monthly there. Take a look at the monthly, because it's been there. It's been in a rally, crazy rally. So it's about time to take profits. I'm not sure I want to short this strong name, but maybe buy the pullback on the weekly.
So the pullback on the weekly, the big number down here is like 719, and that's kind of exploring the whole fair auction on the weekly. And again, you know, the profiles have edged higher. You know, things don't go in a straight line. We talk about that all the time on the show, and that's massive back the truck up support, I guess. It's around 719 on Amazon.
Right.
And, yeah, and Juan and I are looking at a lot of the same things here. What about crude?
Oh my God.
Yeah, what's the story on this one? I mean, we pretty much, you know, are sitting at daily support here now, but we're right in the middle of a fair auction on the weekly. I mean, is there any direction that you can kind of see here on crude, or are we just going to rattle around here?
A very good question. I mean, and so many variables behind that. Of course, it's trading below POC, so you should favor shorting that thing. And the Navigator is pointing now down, and it's kind of flat Navigator. So I'm not. 43 could be the next target, but 47, we're sitting in support right now. So 47 for the long side, 43 for the short side. Is seller's auction is trading below the POC, so the crude should visit, if it weaks a little bit, it should visit 43 is my guess.
Yeah, I'm a little more bearish on crude than bullish. I've been talking about that. We had a nice slow rally up in 48 the other day, and went into that neighborhood, and was a nice little resistance area to sell. Juan, thanks for coming on today, man.
Absolutely, anytime.
And I'll talk to you later today.
Sure.
Thank you very much, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Juan Villegas, thanks for coming on today. It's always good to talk to you, my friend. Here's the British pound. We talked about, waiting for this to come down to support again. Now the support 132.53. I'm a big fan of this at least getting now back to 134.07 and maybe that 136 and some change, 136.81. You got massive support here. I hate to say massive because then it's going to be broken, but you got a big POC on a wide profile on the British pound at 132.40 and 132.53 is those daily unfair lows. We're kind of defending that area right now, as you can see, and could have another move up in this particular instrument. Euro, I mean, nothing to really talk about there. We're not even going to look at it. Australian dollar, we talk about this a lot. Let's see here. So, we've got a couple of good bounces off this 74.78 area on the weekly. That's now coincidental with this daily unfair low. I don't like how we've just come down again here and are hovering around this. I'd probably, put some relatively tight stops on the Aussie dollar to try to buy support here again. But again, it's not exactly acting right down here. It's not following through on the upside like I'd hoped it would. Let's take a look at gold really quick. All right, so situation on gold, 1331, 1333, that's broken. Not a big fan of playing around with this down here without anything to hang on to. I want to see this get back above 31.33 on the December contract. Beans we talked about earlier, big report. Might want to wait and see on that one, but I'm a little bit more bearish than bullish. And as we look at a couple of ETFs here, let's take a look at the financials. Ooh. Finally came off, and we've talked about my favorite bank, Wells Fargo. Not. And again, it's like, what's $180 million to these people? I mean, these are, where's the criminal prosecutions on? I mean, this actually happened to me. I still have an account there. I don't know why, but I noticed $300 debits happening on my personal account. I didn't catch it till a couple of months later, and then I went, called him up and like, oh, well, you're signed up for some account security feature or something. I'm like, when did I sign up for that? And what happened? This is this is a true story, personal, mapping to what they've got banged for here. And what, again, where's the, you throw a couple of people in jail, you wake some people up, or at least you wake a company up. But who knows what's going to happen? The course of action these days is do the crime, pay the fine, and keep ripping people off, I guess, in the banking industry. But, I called him up and I said, what is this? And, well, you signed up for this service, figured out that a employee there signed me up for the service, as they did quite a few other people, got all the bonuses, and then quit Wells Fargo. So they gave me back $1,200. I guess that's just the numbers game to them now. So the XLF finally broke down the daily here, trading below 24.23. And support on the financials is 23.58, the big support here. Let's take a look at good old WFC. God, man. I hate these guys. I was talking to a manager there the other day. She was quitting, went to the branch. God, don't go in a branch. You will be more frustrated than you've ever been in your life. But she was quitting. She goes, I just gave my 2-week notice. Again, Wells Fargo manager. I was like, why are you doing that? I mean, you got another job lined up? She goes, no, I don't have another job lined up. I just can't deal with this place anymore. I was like, are the customers that bad? She goes, no, it's not the customers. It's the people that they allow to be hired to work here. Whew. They actually had 8 people collude here in this town to actually take money out of the vault. 8 employees. They don't put that news out everywhere, but it's amazing the people that Wells Fargo hires. Let's take a look at JP Morgan. Duffy, I hear you. Somebody in the den is, local credit union. There's some awesome local banks out there. And, again, kind of getting it away from the mega machine of these criminal institutions. Got one up here for you to look at. 65.96 is support on the daily on JP Morgan. I'm really surprised this didn't pull back harder. But again, they're the master at doing the crime and paying the fine and keeping par for the course. So support is 65.96. There's really I don't see any leverage here to trade this right now. This is kind of something to probably stay away from. Going into the scanner, let's look at strong uptrend, or actually uptrend. These are the stocks that are still kind of hanging in there relative to profiles as far as definition of uptrend here. BB&T, I don't know if that would be considered, it's not a small bank, but it's a cool bank. It's actually based out of, started in Wilson, North Carolina. A couple other things on here that, we've kind of talked about that have been some stocks that have been hanging in there. CSX, pretty big pullback, but again, nothing really technically breaking down here like the S&Ps in general. Here's Goldman Sachs. Here's the daily. Here's the weekly. A lot of these financials didn't really pull back that much. Here's Marathon Oil. Been talking about this one. Kind of reached the top of the profile and backed off a little bit there. Closed within the profile. Okay, so the ETF profile he read, obviously the energy sector is still kind of hanging in there. There's quite a few opportunities here. I'm not a huge fan of crude oil going up right now, so not a big fan of looking to buy longs here, but there's places to play defense in the XLE sector. There's our little buddy down there, Southwestern Energy. There's a daily top of the profile, new profile appearing higher here. We talked about this one kind of breaking out a little bit the other day, and now it's just kind of sitting, compressing up into those weekly unfair highs. A little bit of resistance there, even on SWN. Let's take a look at Exxon. Let's pull that up in our e-signal charts. Wait for it to populate here. So stock has kind of been languishing down here after the breakdown on the weekly. Here's the daily. And looks like you got support around 86.38 now on ExxonMobil. Maybe a little bit of a trading opportunity on that particular stock. Let's take a look at IBM. This is one that's kind of interesting to me because, you know, we're just pulling back really to weekly support. I think you've got a little bit of a chance to buy this thing right now for a trading opportunity on IBM. Stops below 156. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. I was looking at on the scanner uptrend support, stocks that might have pulled back to some support areas based on the avalanche that the S&P went through on Friday. This gives you some great ideas. These weekly and daily uptrend support. This is kind of based on Friday's close information. Some of this information pre-market is kind of lingering over here to the right, but some of the setups. It's pretty easy to pick these. I like to see stocks that are trading still above weekly profiles that have pulled back to maximum support, bottom of the profile, the next time frame down. Looking at ENDP, this is one of those. So I'm going to pull this up, kind of bucking the trend here of normalcy for this stock, just kind of creeping down, dealing with profiles. This is a weekly. But now kind of finding some legs here. And if you look at the daily, again, kind of sitting on the precipice here. But, I mean, you always want the market to come to you to play defense. Nice little trade here possibly on ENDP if you're looking to buy some things. Another stock in that same kind of realm. Let's take a look at well, let me do this. Let me just go here and do this. Here we go. There you have it. Intel. Let's take a look at this one. All right, so, pull back to weekly and daily big-time support areas here on Intel. 35.45 bottom of the box on daily, and 35.38 top of the profile on the weekly. So, again, Intel coming back into that. And, again, I like to see, one of the things I like to see is just for something to come completely, that's been in an uptrend, completely down to kind of test the waters on the bottom of the profiles on the daily. Roper Industries, maybe. Got better things out there to look at than this one. Liberty Interactive Corp, Cincinnati Financial, let's take a look at that. Okay, here we go. So, a really strong stock coming down into the bottom of the box on the dailies. Again, 75.42. Might have a little bit of a trading opportunity here. Nordstrom. I like this one a lot. Actually, weekly profile appeared below price action last week. That's bullish for the long term. And then we're sitting at the bottom of the box on the daily. Didn't really come apart at the seams on Friday. Let me clear that. A couple other stocks to look at here. Let's take a look at Chubb, sitting at weekly support there. Freeport McMoRan. Let's take a look at this one. Well, sitting at the bottom of a weekly box at 10.20. Could be able to play defense there. Pfizer. Let's take a look at this one. Ouch. Well, big wide profile, bottom of the profile, 33.92 on Pfizer. Even though we've broken down on the daily, that's Custer's last stance for this thing. Schlumberger, let's take a look at that one. 77.36, we're there. Okay, guys, just to sum it up, let's take one last look at the S&Ps. And nothing to hang on to yet down here on the 240s. So, again, we're probably going to just float around down here today. I wouldn't take any large positions yet. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.